Welcome back to Investing Talk Podcast.
Today we're looking at CIFR mining.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we look at the U.S. crypto mining sector, CIFR has really established itself not just as a player, but as a key accelerator.
Yeah, it feels like they're not just trying to survive, they're playing to win the next cycle, right?
Exactly. It's all about scaling capacity faster than almost anyone else.
And you can really see that aggressive scaling in the top-line numbers. I mean, the data we have shows massive revenue growth. For the full year 2024, they pulled in, what, $151 million?
$151.27 million, to be exact. And that kind of growth trajectory, it just blows a lot of their peers out of the water. They're taking market share and fast.
Okay, but you have to look at the other side of that coin. What about profitability?
Right, and that's where the story gets more nuanced. The net income for FY 2024 was negative, about minus $44 million.
Which might scare off some investors at first glance.
It might. But for anyone who follows this space, this is sort of the standard playbook for a fast-expanding miner. It's an infrastructure-heavy business.
It's that classic growth before profit model. They're pouring every dollar they have into building out facilities, buying new rigs.
Precisely. You take the short-term pain on the bottom line for long-term dominance. And if you look at the quarterly results, you can see that operational momentum. The losses are getting smaller.
They're becoming more efficient as they scale.
That's the idea. And Wall Street seems to be buying it.
Yeah.
Analysts are projecting this revenue acceleration to just continue right through 2025.
And they have a track record now, right? They've met or beaten revenue estimates for the last 2 quarters.
They have. That shows they can execute on these, very ambitious targets.
So let's talk about financial strength, because in this sector, that's everything.
It really is.
Yeah.
And this is where CIFR, I think, really starts to separate from the pack. They have a market cap of nearly $8 billion.
That's huge.
It puts them among the best capitalized players in the entire sector. And crucially, their debt is pretty low relative to their assets. They have plenty of cash.
And that low leverage is a massive strategic advantage. I mean, when Bitcoin's price gets volatile, a lot of their rivals get squeezed and have to raise cash by diluting shareholders.
But CIFR doesn't have to. They have that flexibility. That's their lifeline.
So how does that translate to a competitive edge, a real moat?
Well, it comes down to cost. It's all about their scale and their geography. They've been very strategic, setting up at places like Texas with massive low-cost power agreements.
But is that sustainable? I mean, mining difficulty is always going up, and everyone is chasing cheap power.
It's a fair question. But it's not just about finding cheap power today. It's about speed of deployment and size. They're constantly expanding and rolling out the absolute newest, most efficient mining rigs as soon as they're available.
So they're always a step ahead on the efficiency curve.
They're trying to be. It makes it very, very hard for smaller players to keep up.
Okay, let's get to the big news. The move that's on everyone's mind, the $1.4 billion question.
Yeah, this is the defining move. On November 6th, they priced a massive private offering, $1.4 billion in senior secured notes.
So what does senior secured mean for the average person listening?
It just means the debt is backed by the company's assets. It makes it a safer bet for lenders, which helps them get a better interest rate. And the plan for the cash is crystal clear.
It's all going into that huge new facility in Texas, Barber Lake.
Every penny. It's pure acceleration.
The market's reaction seemed a little mixed, though. On one hand, optimism. On the other, a lot of concern about taking on that much leverage.
And that's the trade-off. It's a big jump in their risk profile, even if it's for future growth.
We even saw that play out with their Q3 results. The numbers were solid.
Very solid. $72 million in revenue, a narrower loss year over year. It was a clear beat.
And yet, the stock dropped after the release.
It's that crypto paradox.
Yeah.
The market's expectations were just sky high, maybe even unrealistically so.
But there was another piece of news in there that I found fascinating. That AWS partnership.
The Amazon Web Services deal.
Yeah.
Yes, that is huge. A 15-year lease for a data center campus.
So this isn't just about mining Bitcoin anymore, is it?
I don't think so. This signals optionality. It's a platform they could pivot. Maybe for high-performance computing, for AI. It's an incredibly smart hedge against being a pure play miner.
Okay, so with all that in mind, let's look at the charts. How is the stock actually behaving?
Well, technically, it looks very strong. It's in a clear bullish trend.
Trading well above its key averages.
Right. It's comfortably above the 50-day moving average, which is around 1570, and way above the 200-day, which is down closer to $7.
And staying above that 200-day for a long time, that's usually a sign that institutional money is in for the long haul.
It is. So if you're looking at key levels, you have support right around that 50-day mark, call it 1550. And resistance is probably in that $19 to $22 range.
So based on that, a 3-month outlook might be, what, 1650 to 2150?
I think that's a reasonable range, assuming we get those bullish catalysts we're expecting.
And the momentum indicators, like the RSI and MACD.
The MACD confirms the uptrend is solid. The RSI on the shorter time frame is, a little hot, suggesting it might be a bit overbought for a moment, but the overall picture is bullish.
And what about the analyst consensus? That's what really stands out to me.
It's high conviction. It's a strong buy across the board with an average price target of $22.85.
Which is, what, a 22% upside from here?
Roughly, yeah. The institutions clearly believe the growth story.
Which makes those near-term triggers even more important. What should we be watching for over the next, say, 0 to 3 months?
Okay, 3 key dates. First, that Barber Lake note's closing. That's expected November 13th. Needs to go smoothly. Second, there's a big ETF rebalancing on December 20th. That can force a lot of capital into sector leaders like CIFR.
And then earnings.
And then the Q4 earnings report in late January. That's the big test. Everyone will be watching for that continued year-over-year growth.
Of course, beyond the official dates, there's always the rumor mill.
Always. There's a lot of chatter about potential M&A, maybe CIFR snapping up some smaller rivals.
Or maybe becoming a target itself.
That's also possible. And there's speculation tying back to that AWS deal. Chatter about converting some of that new capacity for AI data centers or a big cloud hosting deal.
That optionality again. But let's ground this in reality. What are the core risks?
Number one is profitability risk. It's simple. Their margins live and die by the price of Bitcoin and mining difficulty. If Bitcoin slumps, that new debt becomes a heavyweight.
Makes sense. What's number 2?
Execution risk. They're expanding at an incredible pace. A project as big as Barber Lake, it's just ripe for potential delays, cost overruns, operational headaches.
And the third risk, which hangs over the whole sector,
is regulatory risk. The industry is always vulnerable to a shift in legislation, especially around energy use. Now, CIFR's focus on U.S.-based compliant operations helps mitigate that.
it insulates them a bit, but doesn't eliminate the risk entirely.
Not at all.
So putting it all together, you've got accelerating revenue, this cost efficiency moat, bullish technicals, and strong conviction from insiders and institutions.
Yeah, insiders have been net buyers, which is always a good sign.
It feels like a very bullish case. I mean, we're rating this a 9 out of 10.
I think it deserves it. They've proven they can execute. But how you approach it really depends on your time horizon.
How so?
For a short-term trader, it's very attractive. You can trade the volatility around these catalysts like earnings or facility launches.
But for the long-term investor?
For them, I think CIFR is positioned for real structural growth. They're set to benefit from the long-term adoption of Bitcoin, sure, but also potentially as a key piece of digital infrastructure for things like AI.
So their recent move to secure $1.4 billion for Barber Lake highlights all the confidence they have in that future scale. But execution speed will be the defining factor that determines if they actually hit those ambitious, $22 or even higher price targets.